Who's ready for an FOMC trade recap? Today was so beautiful. Right when FOMC hit, we had literally the most beautiful sell model. So without further ado, let's just get into it. Start with some top down. We opened the day about here, right? We are still within this range at this point, right? So the low we're looking at here is here. We have a potential still draw lower because we have right here, we have daily fair value gap at this low too. So this is a potential point which we want to see price draw towards, right? So zooming out, we have 1 hour, 4 hour fair value gaps right here. I'll just mark this out just to show you guys kind of what we're looking at. So the higher time frame looks bearish, but we still need lower time frame confirmation, right? Now NQ is giving us the exact same thing here. We have still lows lower. We have this imbalance and we have this low sitting right here, right? So zooming into the day, on open, we see a beautiful seek and destroy model play out. And the reason I'm on TradingView today is because we can see right here, we have a beautiful seek and destroy model on open, right? So super interesting combination. We have seek and destroy and FOMC in the same day. So interesting plays, right?
The market
opening
is
the
open.
market, what we see is NQ ends up taking this low right here, and ES does not, right? So NQ takes this low right on open and we place in an SMT. ES creates in equal lows, right? So I'm marking this as an SMT. ES puts in equal lows, and then zooming to the 1 minute, ES kind of sits in this range. So we roll over to ES, like we said, right here we have sell side liquidity session low. It does not get hit. So we have an SMT sitting right here. Let's just mark this in really fast, right? So now zooming to the 1 minute. Right when this happens, ES kind of starts to get a little bit of a move higher, and we're not really seeing much from ES. However, NQ starts to pump, right? This trade was super interesting. I wish I would have taken it, but honestly, the RR wasn't the best here. And we see this kind of play out right to this high, right? So complete W seek and destroy model, change of the state, inverse for value gap gets tapped right here. Your trade could have been, I would have taken the trade on the change of the state. So this is your inverse for value gap. I would have taken the trade on the change of the state right here. So entry right here. And the issue with this is that it would have been somewhat of a really bad risk to reward unless you were placing a tighter stop. So we could have zoomed to a second time frame and found a tighter stop location for that. So that would have been the way that you'd had to have played this, right? However, later in the day, we end up having some super interesting opportunity, right? Right when we take London high on NQ, ES doesn't, so we put in another SMT. So now we have SMTs on both sides of the market. Keep in mind, ES now has equal lows sitting here, right? So we see 1 minute change in the state. This could have potentially played out, and honestly I was expecting it to play out and to go take that equal low. However, it didn't, which just simply shows us how these conditions really do affect the market, right? Instead, ES wants to go ahead and take that London high, so no problem with that. It takes the high. We make a 3 drives pattern over here on NQ, 1, 2, 3, almost 4, and then on that final sweep we end up taking and making a SMT, right? So if you watch here, we also had an internal SMT. So we had this kind of SMT with this high, and then right here we had this tiny internal SMT, right? So just double confirmation, really can't have too much confirmation. Your trade here would have been after this change in the state with that displacement closed below, almost on market structure shift as well. Then you place in your short position right at that level, SMT high, and then you target for low hanging fruit or for that low. I think this was super clean. I would have just taken this, honestly, not mad at all. If you wanted to, which is what I would have done, I would have been definitely looking for some kind of standard deviation marking. So there's 2 that I would be looking at here. I'm looking at this manipulation leg because this was the true one this was the highest high on NQ. So I'd be marking in this small one, right? And then I'd be marking in this bigger one, right? So the levels I'd be looking to see where do these line up and where can I take partials, right? You don't really have any spots where these line up, so I'm kind of gonna disregard them for right now. I would look to take probably a partial right here too. There's no problem with that, especially taking partials at these levels because we understand that FOMC is bad conditions. And if we look right here, this was a beautiful short trade right here, but it ended up playing out just because of these morning conditions before FOMC. So it's important that we take partials, we take low hanging fruit, we take pieces of the pie, and we're just happy with it. That's how this ended up playing out, and that's why it was so beautiful. Could have left runners to here, and that would have been it for me. From there, we kind of just start playing around until FOMC hits. And from here, we start to see super interesting action. Let's zoom out a little bit and look at just how beautiful this short setup ended up playing out. This range that we're in right here, if we pull gone box, we pull equilibrium right here, from this high to this low, we are right at equilibrium. And as well, we're also tapping right into perfect OTE, midpoint of the OTE level right there. So this is beautiful, right? As well, let's look, what do we have overlapping? We have overlapping fair value gaps. We have breaker up here, order block. Wherever you want to mark, there is something right here that we are potentially reacting off of, right? So zooming lower, what do we see? Watch this pattern. This is so interesting, and you will see this play out every single time FOMC happens. Right at 11, right at 2 p.m., right when FOMC starts, we see a manipulation in this opposite direction. And this move is to trap people and make them say, oh my gosh, go long, we manipulated FOMC news. So they target this high and they just get destroyed, right? Because FOMC has two parts. There's the initial FOMC conference and then the statement, right? So the market manipulates right at this initial FOMC statement news at 11, and then it waits for the press conference to manipulate once again and have the actual move that we're looking for. Because if you look at 11, this tiny little move
the market
right here,
is closed.
This tiny little move that we're looking at right here, this is not no FOMC move. So we wait until 11:30, and now this entire leg right here becomes the manipulation to sweep internal liquidity, move to a point of efficient price action where we can collect orders and then displace lower, right? At this point, I think that there could be a potential short, but I'm not looking at this like, bro, I want a short, I want a full port immediately. I'm waiting to see confirmation. I want to see change of the state. I want to see displacement. I want to see everything that I normally like to see before I hop in for a trade, right? So that's why I saw people top ticking this move, and I'm like, bro, what's your confirmation to take this kind of trade? Like, it's awesome, yeah, don't get me wrong, I wish I could have taken that, but what's your confirmation, bro? So the confirmation that I needed here was this initial 5-minute change of the state. Once we see this change in the state, and we see the complete inversion of all of this order flow, and we see that new fair value gap opened up, we know that there's a high probability that we go ahead and tap back in and move for at least an internal model short. So what do? Zoom into that 30-second, baby. And I wait, we see that change in the state right here. So 5-minute change in the state. We push a little bit higher, back into the fair value gap, back into the change of state, back to equilibrium of this range. Keep that in mind. That's another big point. When we're looking to take these internal model trades, having it tap equilibrium just like this is so great for our trading, right? We end up taking this high, and now I'm looking curious to see if there was an SMT here. No SMT. So zooming 15 seconds where I ended up taking my entry, right? Zooming to here, we see that change in the state, we see the inverse fair value gap, we see a new fair value gap opened up, take my order at the change in the state, boom, boom, bam. I just target a simple little baby 2.3R. Beautiful, efficient price action. There's really nothing more to it than just this. Beautiful, efficient price action. Now, how would I have left runners? There's two standard deviation levels I'm watching. I'm watching this bigger time frame level right here, this bigger manipulation that we marked out earlier. The 2 goes all the way down to here, right? We could potentially see this get met way later. We have the 1 level hitting right here, which, I mean, look at that precision. This level is most likely aligned with something on the bigger time frame, so let's just quickly check. 1 is aligned with consequent encroachment of that wick. I mean, not something I really care about. However, it is a level that we can watch, right? Now, the reason that I'm able to say, okay, I want to watch the 1 level is watch this. We zoom into the 15-second. We can now go into here, and we can find the manipulation leg on this time frame. And then from there, we can mark out another set. And now we can say, okay, look, 3.5 to 4 is perfectly, not perfectly, but relatively aligned with that 1 level. We now have a point in which we have 2 standard deviation lineups looking good to leave runner to that level. So where would I have left it? My first take profit is at this low or it's at -2, because a lot of times when -2 is close within this range to that low, a lot of times we'll just take -2 with that. So you can squeeze out a little bit more profit just like that. This is something I'm currently in the process of forward testing to make sure that this is a consistent way to actually take trades, right? But zooming out, we have 3.5 to 4 level. I would be putting my next take profit at 4 or at 3.5 level. Then I would be taking it, okay, where is our actual levels that we can expect to see price hit? You could have taken the profit at 3.5, or you could have taken it at this New York AM low down here. Then the next level would be low of day. Then from there, you can squeeze all the way to 2, 2.5, wherever you want to leave runners. And imagine if you were able to get this at 2.5. Bro, that is an 11R trade simply just by waiting and watching, observing the market. We don't have to top tick anything. We don't have to top tick anything. This is going to happen. This pattern is so beautiful. It repeats itself every single time frame. Just watch for it to happen. And I swear, you will see it play out every single day. Your system will continue to play out every single day. You don't have to sit there and guess, predict, simply react. Which highs are getting swept? Which highs are getting displaced through? How do you identify the manipulation, the displacement? Look for it. Identify the manipulation, the displacement. Take the trade. Target opposing liquidity. How hard can it be? Simply follow the strategy every single day and you will see this change. You will see this happen. This is what Fomc did, and honestly, this is a beautiful trade setup in my opinion. This is something that, I think that, like, what more can you ask for than this move, bro? Most realistically, this would have been my final take profit for a 6R, but there is no problem with that. 5.3R, there's really no problem with that. That's a beautiful, efficient move, and this was all over within like 2, 3, 4 minutes. How much more can you want than that? You can make so much money with this much movement in 4 minutes. This is a beautiful trade. The setup repeats itself. This is the same setup that we took on Tuesday. Let's go to Tuesday. Let's look. Same exact setup we took here. Look on NQ. Same exact setup. Sure, this is what we covered in the previous video. Go ahead and watch that. It's beautiful. Same exact same setup. 15-minute time frame here, but on here it's a 5-minute time frame. Okay, same thing. Just zoom in, bro. Look, same thing right here. Same exact setup. And it just prints. It prints. It's such a great setup. You guys have to learn how to trade like this. Go watch some of my videos, watch my trade recaps, and I'll be making this market maker model video this weekend. I pray that you guys can tune into that and actually learn just how to snipe these market maker models, the forever model, the fractal models. It's super interesting stuff, and when you get into this, you will truly see just how insane and dangerous this can be. Thank you all for watching. I hope you guys understand just how great Fomc can be for traders, for us who are not trying to make money, but we're trying to identify the highest probability setups. Fomc is always great for us to look at. So thank you all for watching. I hope you guys learned something, and I'll see you all in another video. Peace out.